Namaste and good morning. Welcome to the Solar Aane Daily Brief, your daily dose of business news that matters. I'm your host Neha at solaraane.com, and today is Tuesday, April 14th, 2026. Markets are shut for Ambedkar Jayanti, so it's a quieter desk, but the macro wires are very much awake. Let's dive in. First, today's top headlines at a glance. 1. Indian stock exchanges and banks are closed today for Ambedkar Jayanti. Yesterday, the Sensex slid another 702 points to 76,147, and the Nifty closed at 23,842, as the US-Iran fallout continues to bruise sentiment. 2. The Union Cabinet has notified the Startup India Fund of Funds 2.0 with a 10,000 crore rupee corpus. That's fresh dry powder for Indian venture capital. 3. India's retail inflation ticked up to 3.4% in March, with food inflation jumping to 3.87%, below RBI's 4% target, but the pressure is building. And 4. India and Oman will operationalize their free trade pact from May 1st. Commerce Minister Piyush Goyal made the announcement from the WTO ministerial in Cameroon. Now let's unpack the two stories that matter most for your business. Deep Dive 1. The Monsoon Warning. The India Meteorological Department has issued its first long-range forecast for 2026, and it is sobering. Rainfall is expected at just 92% of the long-period average, officially below normal. Agriculture still contributes around 18% of GDP, and 60% of our farmland is rain-fed. So this forecast lands with real weight. A new systematics report flags a double whammy. Weak rains plus a spike in agro input costs. Fertilizer, ammonia, phosphoric acid, LNG. All of it flows through the Strait of Hormuz, which is exactly where the US-Iran conflict is disrupting shipping. Global fertilizer prices are already moving up, and the fiscal burden on subsidies is climbing. March food inflation at 3.87% already tells you the direction. Vegetables, pulses, coconut, tomatoes, staples are leading the climb. If monsoon underperforms, analysts see CPI breaching 4.5% in the second half of FY27. What does this mean for MSMEs? If you're in FMCG, agri-processing, rural retail, or quick commerce, budget for softer rural demand in Q2 and Q3. If your distribution is rural-heavy, start scenario planning for a 10 to 15% volume cut. In the worst case, restaurant owners and packaged food brands, lock in palm oil and dal contracts now while you can. And if you're an exporter of rice, sugar, or onions, be ready for the government to tighten export curbs again if crop yields disappoint. Deep Dive 2. The Startup Capital Boost. The Cabinet today formally notified the Startup India Fund of Funds 2.0. 10,000 crore rupees anchored by SIDBI will flow into SEBI-registered alternative investment funds, which then deploy into startups. This is the second avatar of the original FOF, which backed over 150 AIFs and unlocked upwards of 28,000 crore rupees in capital for roughly 900 Indian startups. This matters because it lands at a moment when startup funding has actually been improving. Q1 2026 saw 18,240 crore rupees deployed, up 23% over the previous quarter and the highest quarterly number since mid-2023. Pre-seed and seed now make up 67% of deal count. AI-focused founders are commanding 2 to 3x higher valuations, and deal flow has spread. Cities outside Bengaluru, Mumbai, and Delhi NCR now account for over 35% of deals. For MSME owners thinking of raising capital, the fund money won't come to you directly, but it lowers the cost of capital for the VCs that might. If you're in deep tech, climate, advanced manufacturing, or B2B SaaS, the next 12 to 18 months should see more check-ready investors. And if you're in a Tier 2 or Tier 3 city, take note. Geography is no longer a deal breaker. Now, what else hit the wires today? Bluespring Enterprises signed a share purchase agreement to acquire 100% of LSG Skychefs, India's Bengaluru operations, for 129 crore rupees. That's in-flight catering for Indigo, Lufthansa, Qatar Airways, a long-term play into aviation services until 2039. The HSBC India Manufacturing PMI dropped to 53.9 in March, a 4-year low, still in expansion, but input costs hit a 43-month high, and export orders, ironically, were the bright spot. Housing sales fell 13% year-on-year in Q1 2026 to under 1 lakh units for the first time in 18 quarters. Bengaluru was the only market to grow. Premium homes above 1 crore rupees grew 11%. The affordable segment is where the pain is, and Indigo is in turbulence. Dubai has capped foreign airlines at one daily flight from April 20th to May 31st, slashing Indigo's planned Dubai slots by 95%. Willie Walsh takes over as CEO in August. Air India has doubled fuel surcharges for the second time this month. So what does all this mean for your business today? 1. Treat a below-normal monsoon as your base case, not a worst case. Lock input contracts, stress test rural sales, talk to your distributors about credit lines now. 2. If you're raising, refresh your pitch. Capital has reappeared, but it wants AI, deep tech, or real margins. Generic B2C plays are still out of favor. 3. For exporters, the India-Oman FTA from May the 1st opens 98% of your shipments tariff-free into Oman. Textiles, gems, auto components, agri. This is a real door. Have your HS codes and certificates of origin ready. 4. Watch your fuel, logistics, and travel line items. Airline surcharges, crude, and Hormuz risk are all pushing costs up. Renegotiate freight contracts this week if you haven't. That's your solarane.com daily brief for today. If you're thinking about buying or selling a business, head over to solarane.com. That's 16ane.com, where we make business deals Solarane Pakka. See you tomorrow.